This is our Forex blog for March 25th, 2013. And as you can see on here, we have an index of each individual currency: the dollar, the yen, the euro, the pound, the Swiss, the CAD, Australian, New Zealand. This is something that I created that isn't available anywhere else. And basically, we're comparing every dollar pair, every yen pair to all the other yen pairs and so forth to create this actual chart of each individual currency. And it's very easy at a glance to see if, like in the euro, it's not able to go above the previous day's high, dotted green, breaks the hourly moving average. That's a big sign the trend's going to go down. Pretty much trends down all day long. Same thing with the Swiss. The Australian's above the hourly, breaks out above the point of control, trends up the rest of the day. This is very predictable, and you can actually anticipate future trend directions with this. You basically want to look to buy currencies like the Australian versus the weak ones, the Swiss and the euro. It's that simple. And the dollar, when it was breaking out later in the day after 8. So in a nutshell, you're basically looking to buy the strongest currencies versus the weak, and you can do things such as, draw trend lines underneath there and continue to trade with the trend until trend lines are broken. You can look for double tops, double bottoms, false breakouts above the previous day's high that come back into the range are very good reversal signals. When support levels, like in the pound, where it breaks the previous day's low and the point of control, comes back up and retests it, that is a very high probability continuation pattern. So, for instance, right here, the pound's very likely to go down. At 5 o'clock, which one is very likely to go up? Well, the yen is above the hourly. However, it hasn't been able to break through the point of control. The dollar had just broken down underneath the hourly, so you wouldn't look to trade it against that. The euro looks very weak. So does the Swiss. Obviously, the Australian's the strongest. So at that time, we're looking to do the pound Australian short, weak pound, strong Australian. And you can see coming up to 5, this one's just kind of going sideways. And you can see it falls about 40 pips here. Very high probability. And also note that it went from above to below the hourly here at 2 o'clock. If you go back and look at 2 o'clock, it just broke through it went to the point of control, and then a little bit after that busted on through. That's a very high probability place to either go long or short when these levels get broken. Let's bring up the main pairs. This shows the FX trend intensity underneath it. And there's a lot of high probability patterns on here, and I'm going to showcase something new as well. But let's just take a look at this one. This one's trending down. It wasn't able to get to the previous day's low, has a nice little wedge pattern. It's really a nice confirmed buy here a little bit after 8 when it goes back above the hourly. The only downside is the daily and weekly statistical trend is down. The yen is in a nice little rectangle pattern. And typically between the point of control and the hourly, you don't want to be buying or selling it. It tends to be very choppy. So the pound, once it breaks through here at 4 o'clock, it's pretty safe to sell it. The euro, once at 8 o'clock, it's very high probability, especially when it breaks through the previous day's low. So the euro dollar is a great one to be looking for a sell at 8 o'clock. The dollar's looking very strong, the euro's looking very weak, and I'd like to showcase a new enhancement I made in our value areas. I upload each day and every week the point of control upper lower value areas. And this basically shows you where most traders have their positions for the previous day, and the previous week is the thick ones. On Friday, the point of control, the price where most traders have a position, went up 79 pips from the previous day. So the previous day's trend is up. But if you notice here on the weekly one, during the previous week, the point of control, where most traders had their positions, was down 86 pips. So what this is telling you is the trend for the week was down. However, Friday was up. And so it's a very high probability today, if it breaks down, especially once it goes below the point of control right here, somewhere around 1.2980 it looks like, you want to look for sells. And I'll just put this up on a few other charts just so you can get a feel for it. Dollar CAD, let's just take a look at this. Notice the lower value area for Friday was down 7 pips. Today the dollar CAD couldn't get above this area. It had a false breakout. And once it goes below this low, it's a very high probability area to go down to the lower containment band and the lower weekly value area, which you can see for the week fell 39 pips from the previous week. So 2 weeks ago's lower value area was 39 pips higher than last week's lower value area. And the value areas are where it spends 68% of its activity for either the day or the week. So basically Friday was a slightly down day. The previous week was a slight down day when it couldn't bust out to the upside, broke down right here. Very high probability place to sell. And this gives you a wealth of information, additional information on the chart. Let's take a look at the dollar Swiss. This one, the point of control on Friday was down 43 pips. The lower one, it looks like 67 pips. So you wouldn't necessarily know that this is the one that's going to be exploding up today. So you might take a little bit smaller position here with your stop underneath here, and this would be your profit target. When it shoots through that, I would have probably got out of the trade right here. And most days, if you see any kind of extreme move, and the value areas had shifted down a considerable amount, you want to basically look to do counter trend trades. Today is one of those days where the dollar just at 8 o'clock got super strong and stayed strong. So if you were looking to do a counter trend trade on this, you probably would have drew your fib from here to here. That would have given you these fib areas up there to look for sells. I'll draw it on here so you can see yourself. I kind of estimated I was pretty close. So if you look for kind of a sell up here when it's this far above the upper band, you probably made 15 pips. You got short again here, made 10 or 15 pips, just because you can see that the previous week did actually go down. Let's take a look at some of the other ones just so you can see how to use this new feature. The point of control for Friday went up just a measly 8 pips. The weekly value area, where most traders had positions for the previous week, was down 240 pips. So you can see that without even looking at any longer term charts, last week was a big down week, but Friday was just a slightly up week. The upper value area for last week is also down 240 pips. The lower one was down 224. They're all independent of each other. So basically, by looking at this chart, you know that last week's trend was down, had a slight up day on Friday, and you might have gone short right here when it broke from above to below the last week's upper value area. You would have really taken a buy if it broke out. You're going to make less money trading when the longer term trend is down, which it clearly is. And this lets you see all that information. Also, one other thing to keep in mind, the perfect oscillator tends to at and near the 80 level reverse. And so if you look on here, you can see it reversed up, kind of went sideways. This one here failed. This one here kind of went sideways. And when it's outside the bands, you're typically going to get a 30 to 50 pip pullback. You might get into a little trade here and make a few pips. This one up about 15-20 pips. But when it's underneath the band and you see 1 or 2 levels of extreme areas being hit, always draw your fibs on the last swing. And I will typically myself scale in to a trade progressively when it's this far underneath the band and my perfect oscillator's down. So I would have probably, for example's sake, maybe bought 1 lot here, 2 lots here, and it doesn't look like it would have hit my 3rd scale in, but I'll typically do 4 or 5 or 6 lots, and then I have 1 more scale in. But that's one way of trading these extremes. An easier and more profitable way is at this level and below using a range chart, and we're going to scale up, scroll up just to show this here, Euro Yen. This is a 5 pips per bar. You can basically draw a trend line over the bar's lows from those levels, and then get into your trades at those price levels. So let me just draw the fib on here real quick. Well, you can see from above, 51 was the first one, and then we had 29 is the second fib area. So I probably would have got into a trade here, smaller position. The second one, let's just say I bought 1 lot here, made a few pips, bought again a little bit more, and then when it goes down to the 1.618, I tend to scale in more on the range charts if you're going to use a range chart. So for example, 1 lot here goes down a little bit more, maybe add 2 or 3 more lots on there. And when markets are this far down, they'll typically make a two-wave move up. So you can draw your fibs on the first wave here, and somewhere between the first and second fib is where you want to get out. So again, we would have probably got into a trade right here and also right here. Maybe let's just say, for example, say 3 lots on here, and then once it makes a wave up, doesn't pull back at all, I'm looking somewhere up here to get out of the trade. I'm just going to draw a trend line underneath there. I would have probably got out somewhere at 121. The average entry would have been about 120.25, and a nice 75 pip move for a counter trend trade. And that's an easy way to use our perfect oscillator. Also, you really want to look at the actual index chart too. When at 11 o'clock it's at the lower 2.0 band, you might have done a little nibble here from 11 to 12. You can see in the euro dollar, it's a much higher probability reversal than the yen, which is just exploding at that time. So I would have probably focused more on euro dollar counter trend trades than the euro yen. Let's take a look at some of the other currencies on here real quick. Here's some trades I would be looking to take. Anytime you have a multi-hour sideways rectangle pattern, same thing here. When this one breaks out at 7, this one breaks down at 8. 8 o'clock is a very high probability Australian Swiss buy. And we're going to tie that into the value areas. First thing to notice is on Friday, the value area went up 68 pips. The upper value area, which is where it spent 68% of last week's trading, fell 73 pips. So last week was a down week. However, Friday was an up day. If this found resistance right here and broke down, we certainly would want to sell it. But you have a very nice breakout of this rectangle pattern right here, where this is your profit target. It's also near the upper band. You have a very good chance of making 25-30 pips while risking less than 10. I'd put my stop underneath this little swing low. Initially, my initial stop would be underneath this low right here. Once it went my way and came back down but didn't stop me out down here, I'd move my stop up. And when it breaks out through the upper band, it's an extremely high probability, super strong trend. But most times, most days, markets don't go more than 15 or 20 pips through here before they reverse. So you really want to kind of, draw your trend line on the way up here. And one thing you can do is use our draw a trend line off the low with this tool. And I would, let me take this off here actually. Once you draw a trend line off the low and then you project it from the high point, it kind of gives you a little range here. Typically at the upper levels, the price is going to, stall and reverse. So you have a very high probability reversal here, here, and here. And if you, once it goes above the upper band, like I said before, you can start to look to do counter trend trades because it's usually only a matter of time before they reverse. And you can see at that next fib area up, it does so. And if you put that on a range chart, you would have found even higher probability entries. Let me go over one more anticipatory trade. The New Zealand. Anytime a currency breaks from below to above the previous day's high and it retests it and really can't get, it stays pretty much above it. Here it went slightly, it dipped slightly back in and then busted out, made a higher high here, found support here. When it makes a higher high, this is a very high probability continuation pattern in 830. Obviously, you'd want to trade this against a weak one, the euro or the Swiss. So let's take a look at the New Zealand Swiss buy. And again, I use mostly range charts, and I have tick charts up too, but I don't use them that much. On this actual chart, anytime you see a rectangle pattern, especially in the middle of the range, you have a very high probability if it does trend to go to here, and occasionally, like today, it went beyond that. Like I said before, when currencies get above the upper band, you want to draw your fibs on there, and typically they're going to reverse at the next fib target, especially when you see the perfect oscillator at an extreme here and here. Notice it pulled back here and here. CAD was also extremely strong today, and you can see it broke through the previous day's high, coming up to 5. The Swiss was kind of going sideways at that time, and the euro was above the hourly and broke down a little bit before 3. So the euro CAD after 3, and especially at 5, very high probability sell. So we'll end today's class looking at this one, euro CAD. First thing, looking at the new additions to the point of control, you can see that the value area high of last week and the price where most traders had their positions both fell significantly, and the place where traders had the most trades is right near the value area high. Friday had a slight up day, but again, for the week, down. So basically, once it broke through the point of control, which is where most traders had positions on Friday, and you can see it's also underneath its hourly moving average. When it busted through this level right here, very strong, high probability trade to the downside. The next major support area from these support resistance areas is this. This actually went up only 25 pips on Friday from Thursday's value area low. So it wasn't that big of a move up. It's probably just barely 50% likely to act as support. When this area gets broken, you can take it one more trade. And remember, when it's underneath the lower containment band, most times, most days, price will reverse violently back up. Today is one of those days where you can see pretty much from 3 all the way down to about 1, just straight down. And if you looked at each of those individual charts, individual currencies, the euro is going down from 3 o'clock to 1. There's no bounce on this whatsoever. If you had a trend line, going off of the highs, only after 1 or 1:30 would you have even said that this downtrend might be over. And then looking at the CAD, it's probably very similar. This one at 3 o'clock wasn't that strong, but around 3:30 busted through the previous or the hourly moving average there. Then around 4:30 busted through the highs, and then at 5 went through the previous day's high. If you look at this and you drew a trend line here, the earliest you could say that the CAD might be running out of steam is at 9 o'clock, and then you can see that after that that same trend line acted as resistance right there and there. That's one of the methods that you'll see frequently. When trend lines get broken, they tend to no longer act as support, they tend to act as resistance, and you see it here on the CAD index. There's so many ways to trade. Every pattern, reversal, and continuation pattern that works on regular charts works on the indexes too. For instance, double top right here. It's above the previous day's high. If you wanted to draw your fibs on that first wave up, like I said, Fibonacci areas work on the indexes too. And so all you got to do is find a continuation or reversal pattern on one currency, then look for which currency is likely to be the strongest. Let's just say right here, coming up to 11, the New Zealand's likely to go down, and it did. Let's look for one that is either going sideways or just breaking out to the upside at 10:30. So we want to sell the New Zealand. We're considering selling the New Zealand, I should say. At 10, it's possible. Actually, at 10, this one hasn't gone down statistically too far. Let's look at this one at 10. This one's just kind of going sideways at the high. You certainly could look for a New Zealand CAD sell. That's not the highest probability. I don't think I would even have looked at that. 10 o'clock right here. This one just busted through the previous day's point of control. So let's take a look at sells in the New Zealand dollar coming up to 10. Looking at this chart, you can see it also has a double top. 10 o'clock is right here. So when we're actually looking to sell it. This is last week's upper value area. So, and you can see it went up 84 pips from the previous weeks. So last week was an up week. So looking at that, if we do look for a sell on this, it's probably going to find support at the hourly moving average. It actually went down farther than that. But if you had sold this under this little kind of flag pattern right here, you could put your stop above the high. And so this is your risk. This is your profit target. As long as the profit target's 1.5, 2 times or more bigger than what your risk is, it's worth taking a trade. It's probably, because the last week's trend was up, it's probably maybe 50-55% likely to work. But it's also likely to give you a bigger win than what your loss is if you're wrong. And so you would have pretty much, I would have probably got out of the trade here, maybe went short again right here, and made a very tiny amount on that. The retest here at the hourly, look for a sell, and it kind of went down sideways. I would have probably got out of it right here with only 3 or 4 pip win. But you add all those up, and you probably made about 18 to 22 pips in the New Zealand dollar from that pattern. And keep in mind that 10 pips per day, 50 a week, 200 per month, 400 in 2 months. 400 pips, risking 2% of your account or less will double your account. So every 400 pips doubles your account, and 10 pips a day doubles it in 2 months. So making 20 pips on one currency in an hour or two puts you on your way of doubling your account every month. So keep that in mind when you see small moves like this. They're not all going to be 100 pip moves like the euro dollar and euro yen.